The global currency reset is here. It's already happening, and most people are going to find out about it the same way they find out about everything important in their life. Too late, after the money's already been made by somebody else. I've built companies from nothing. I've sold companies for real money. I've sat on Shark Tank and watched thousands of entrepreneurs pitch me their numbers. And I've watched markets absolutely destroy people who didn't understand what was actually happening underneath the surface. And I'm telling you straight, what's happening to the dollar right now is not normal. It's not a headline you scroll past on your way to something more entertaining. It's the biggest quiet transfer of wealth I have seen in my entire lifetime. And it is happening right now in the background while everybody's arguing about something completely unrelated on social media. Governments around the world are drowning in debt. The US alone owes about $40 trillion. Central banks, the most conservative, boring, risk-averse institutions on the planet, are buying gold at a pace we haven't seen in decades, and the actual cash sitting in your bank account right now is losing real value every single day you leave it there and do nothing. I'm not here to scare you for fun, and I'm not here to sell you fear because fear gets clicks. I'm here because I put my own money where my mouth is, and today I'm going to show you exactly where I'm putting it right now before this window closes on you. Now look, before I get into the meat of this, do me a favor, hit subscribe. I'm dead serious about this. What I'm about to walk you through in the next 20-some minutes isn't recycled finance guru garbage you've already heard 100 times from 100 different guys in front of 100 different whiteboards. This is the actual playbook, the same one I use with my own money. If you were paying a real advisor to sit down and explain this to you, you'd be writing a check with a lot of zeros on the end of it. I'm handing it to you completely free right here, right now, no funnel, no upsell. All I'm asking in return is that you subscribe so you don't miss the next breakdown, because I promise you, this story is not done moving. It's just getting started, and it's going to keep moving fast. Okay, let's actually get into it. Let's talk about why this is happening, because if you don't understand the why, you are going to make bad decisions with good advice. And that's almost worse than making bad decisions with bad advice, because at least then, you're guessing. Here's the deal. The US government owes roughly $40 trillion. And that number is so enormous, your brain basically refuses to process it. It just becomes noise. So let me shrink it down the way I'd shrink down a number for somebody pitching me on the show who threw out a big figure without doing the actual math behind it. If you counted $1 every single second, no bathroom breaks, no sleeping, no stopping for anything, it would take you over 30,000 years to count to $1 trillion. They owe 40 of those. But here's the part almost nobody talks about, and it's the part that actually matters. It's not the total number. It's interesting. The government is paying something like $1 billion every few hours just in interest payments, just to stand still, just to not fall further behind than it already is. That's not principal. That's not paying down the debt. That's just the cost of not defaulting today. Think about that as a business for a second. If somebody pitched me a company that had to pay $1 billion every few hours just to service its debt with no real plan to actually pay the debt down, I would throw them out of the tank so fast they'd get whiplash. Nobody sane would invest in that business. And yet that's exactly the business we're all quietly invested in through every dollar sitting in our wallets. So when any organization, a company, a government, doesn't matter, gets itself into a hole this deep, there are exactly 3 ways out. I've seen this play out in business, I've seen it play out in government, and it is genuinely the same playbook every single time. Door number 1, spend less, cut the budget, tighten the belt, live within your means like your parents probably told you to. Sounds fantastic on paper, except no politician on planet Earth is going to walk into an election year and tell voters he's cutting Social Security, cutting Medicare, cutting military spending, cutting the programs people actually depend on. That door is basically painted onto the wall. It's not a real exit. Door number 2, raise taxes significantly to cover the gap. Also an incredible way to lose your job if you're in Congress. Nobody wants to be remembered as the guy who jacked up everybody's taxes right before they're up for re-election. So that door is essentially locked too. At least locked enough that nobody's walking through it at the scale that would actually fix this, which leaves door number 3. And this is the one they pick every single time in recorded history when a government gets in this deep, quietly make the dollar worth less, print more of it, let inflation do the dirty work, and shrink the size of what they owe without ever having to stand up and admit that's the plan. There's no bill you vote on that says we're going to make your savings worth less this year. Nobody announces it. It just happens slowly in the background while you're busy living your life. And here's the thing. This isn't some fringe theory I dreamed up. We've literally lived through this movie before as a country. And after World War II, the United States had more debt relative to the size of its economy than it does even, right? Now, today, at this moment, and they didn't pay that debt off the honest way, dollar for dollar. They kept interest rates artificially low for roughly 20 straight years and let inflation quietly do the heavy lifting. Instead, the debt didn't vanish because some genius in Washington balanced a checkbook. It shrank because the actual dollars used to measure that debt got smaller and smaller every year. Your grandparents lived through that entire stretch without most of them ever fully understanding what was actually happening to their money in real time. Here's a number that should stick with you. $1 back in 1913 buys about 3 cents worth of stuff today. Read that again slowly. 97% of the value of that dollar is just gone. Not because of one single war, not because of one single stock market crash, just quietly, relentlessly, year after year, inflation eating away at it, while everybody kept using the same paper money and assuming it still meant the same thing it's always had. That is the machine. That is the exact machine running right now, today, just moving at a faster pace than most of us have ever personally witnessed in our adult lives. And look, I know some of you are thinking, okay, Mark, that's ancient history. That's the US. We're the biggest economy on earth. Nothing bad really happens to us. Fine. Go look at what happened in Argentina over the last several decades. Go look at what happened in Turkey just in the last few years. Same exact playbook, just running hotter and faster because those governments had a lot less room to maneuver than we do right now. People who kept their entire life savings sitting in the local currency got absolutely wiped out watching decades of hard work evaporate in a handful of years. People who owned real assets, instead, property, businesses, hard currency, gold, they came out the other side just fine. And in a lot of cases, they actually came out ahead because everything they owned was priced in something that couldn't be casually printed away by a politician trying to buy himself, another term. Now, I want to be clear. We are not Argentina. We're not anywhere close to that level of crisis today. But the direction of travel, the actual mechanism doing the work underneath the headlines is identical. It's just running at a slower, more controlled pace here because we happen to have the world's reserve currency and the deepest capital markets on the planet behind us. Slower doesn't mean it isn't happening. It just means you've got a little more runway to actually get positioned before it really starts to bite, which should honestly make you feel both a little more relaxed and a little more urgent about this at the exact same time. So let's actually define this reset. Everybody keeps throwing around online because I want you to understand what this actually means in practice, not the scary internet version. The real version that's grounded in actual data, a currency reset, does not mean the dollar disappears overnight and we're all borrowing with gold coins in a Walmart parking lot next month. That's not how any of this works. And anybody telling you that is trying to sell you something. What it actually means is a real measurable shift in who trusts the dollar, how much of it. Central banks want to keep holding and what they're choosing to buy instead of holding more dollars. And that shift is already well underway right now. While you're watching this, central banks around the world, again, the most conservative, boring, cautious institutions that exist anywhere on the planet have been buying gold at a pace we genuinely haven't seen in decades. Countries are actively cutting deals to trade directly with each other using something other than the US dollar as the middleman currency. There's a real documented ongoing move away from the dollar being the only game in town for global trade and reserves. Now, is the dollar going away completely? No, I'm not telling you that. And anyone who tells you that is either wrong or lying to you for clicks. The dollar is still the biggest, most liquid, most widely used currency on the planet. And that isn't flipping next week or next year. But the total unquestioned dominance, the kind of blind trust the entire world used to place in it without a second thought, that's cracking, slowly, visibly, in real time. And when the biggest, most cautious money on earth, actual central banks, start quietly rotating out of dollars and into hard assets, you should probably pay very close attention to what they know that most regular people watching the evening news don't. There's also a second piece of this reset that doesn't get nearly enough attention, and it's the move toward digital currencies, both the government-backed kind and the decentralized kind. Countries are actively experimenting with their own digital currencies, and trading blocs are building payment systems specifically designed to route around the dollar entirely for certain transactions. I'm not telling you to go dump your savings into whatever coin is trending this week. That's a completely different conversation and a much riskier one. What I am telling you is that the infrastructure of global money is shifting under our feet in real time. And the assumption a lot of people are still operating on, that the dollar will always be the default, unquestioned, universal choice, is exactly the kind of assumption that gets people caught flat-footed. And I've sat across the table from enough entrepreneurs who built their entire business model on an assumption that seemed permanently true right up until the day it wasn't. Currencies are no different. They feel permanent right up until the moment they don't. Now, here's what I actually do with my own money. And I want to be completely straight with you before I go further. I am not a licensed financial advisor. This is not personalized advice for your specific situation. This is literally just what I do because I've lived through enough of these cycles to recognize the pattern when it shows up again. First thing, I don't sit on huge piles of cash beyond what I actually need. Keep your emergency fund. Absolutely. Keep 3 to 6 months of expenses somewhere safe and boring, so a surprise never forces you to sell something at a bad time. That's just common sense. Not a hot take, but money beyond that cushion, just sitting parked in a savings account earning next to nothing, that's a losing trade in a world like this one. It's like leaving a tub of ice cream on your dashboard in the middle of July and being shocked. It's a puddle of soup by the time you get back to the car. So what do I actually put my money into instead? I buy ownership in real things, real estate that generates actual income, not speculative land bets. Businesses with genuine pricing power, meaning companies that can raise their prices and their customers keep buying anyway, either because they need the product or because they're loyal enough to the brand that they don't bother shopping around. Think hard about the stuff in your own life you'd keep buying even if the price jumped 10% overnight without a second thought. That's the profile of the company you want to own a piece of, not whatever's trending on some finance account this week. Second thing, I hold a real position in gold, and I'm not the least bit embarrassed to say that out loud on camera. I used to roll my eyes at gold. Genuinely, I thought it was an outdated relic for people who didn't trust anything modern or digital. But when the most conservative institutions on earth, the actual central banks that print and control the money supply, are quietly loading up on gold themselves at record pace, that tells you something important. It's not really about trying to get rich off gold specifically. It's about owning something that physically cannot be printed into oblivion by a government trying to quietly solve a debt problem that can't fix any other way. Third thing, and this is honestly the one I see people mess up the most. I do not try to guess which one exciting company wins some massive new trend before everybody else figures it out. I learned this lesson the hard way watching the dot-com crash up close. Everybody was scrambling to pick the next big winner in the internet boom back then. And the ugly truth is most of those companies went straight to zero, no matter how confident everyone sounded at the time. You know who actually made money reliably through that entire mess? The people who own the infrastructure underneath it all. The toll roads, the payment rails, the exchanges, the unglamorous, boring stuff that everybody has to go through. No matter who ends up winning the race, sell the pickaxes, not the gold mine. That's not just a cute little saying I picked up somewhere. That is literally how real fortunes got built in every single gold rush throughout history. And it's exactly how they're getting quietly built right now in whatever the next big boom ends up being. Fourth thing, and this one might surprise you coming from me, I put real money behind actual businesses. I understand, not just paper. I've always believed owning a piece of a real cash-generating operation, whether that's a private company or a stake in something. I actually understand the mechanics of beats owning a ticker symbol you can't explain to your own kid. If you can't tell me in one sentence why a company makes money and why customers keep coming back, you shouldn't own it, full stop, no matter how many people online are hyping it up this week. That rule has saved me more money over the years than almost any single investment has ever made me. It's boring advice, I know. Boring advice usually is the advice that actually works. It just doesn't get the views that a hot stock tip gets. Now let's talk about what I'm actively staying away from, because knowing what not to do is honestly just as valuable as knowing what to do, and honestly, maybe more valuable. And I'm genuinely cautious right now about being overly concentrated in a small handful of massive tech names, even through a plain old index fund, because a huge number of people think they're automatically diversified just because they bought the index. So what they don't realize is that the 10 biggest companies now make up something like 40% of that entire index. That's not real diversification. That's a concentrated bet on 10 companies wearing a costume that says diversified on the label. If a few of those names get shaky, and we've already watched real cracks show up in some of the most famous names in the market recently, your safe retirement account takes that hit right alongside them, whether you meant to sign up for that risk or not. I'm also staying away from long-term bonds that lock you into a fixed, low return while inflation quietly eats away at the real value of whatever you eventually get back. And I'm staying away from businesses carrying a mountain of debt with no real pricing power, because in an environment like this one, debt without the ability to raise prices is just a company slowly getting strangled from both directions at once. I'll go a step further too. I'm cautious about jumping into whatever the internet is screaming about this week, just because it's exciting. Excitement is not a strategy. Every single cycle I've lived through has had its version of the can't lose trade that everybody piled into right before it fell apart. And every single time, the people who got hurt worst were the ones who bought in loudest, latest, and with the most leverage. If everybody at the dinner table already knows about it and is already in it, you're probably not early, you're probably late. And that's a hard thing to hear, but an important one. The single biggest mistake I keep watching regular investors make right now is doing absolutely nothing, freezing up completely. Either panic selling everything at the worst possible moment because the headlines scared them, or closing their eyes and hoping it all somehow sorts itself out on its own. Neither one of those approaches actually works. The smart money isn't panicking, and it isn't frozen either. It's quietly repositioning right now while everybody else argues about it endlessly in the comment section. So here's my challenge to you, and I genuinely mean this. Don't just watch this video, nod along for 20 minutes, and go right back to scrolling like nothing happened. Go look at your own actual accounts today, right after this. Actually open the app and look at real numbers, not vibes. How much of your money is just sitting in cash, doing absolutely nothing, while it quietly loses value? How much is piled into the exact same 5 or 10 stocks that everybody else already owns, purely because it felt safe to follow the crowd? Pick one single thing from everything I laid out today, just one, and go actually learn more about it this week, whether that's real assets, companies with genuine pricing power, or just finally sitting down and understanding what's actually inside your own portfolio. Right now, this isn't about panic, and I want to be clear about that. It's about making sure you're on the right side of a shift that is already happening in motion, whether you choose to participate in it or not. The people who come out ahead of a reset like this one are almost never the smartest people in the room. They're simply the ones who actually paid attention and moved before everybody else finally figured out what was going on. Drop a comment and tell me honestly which side of this line you think you're standing on right now. The side quietly getting squeezed by all of this, or the side actively positioning for what's coming next? Subscribe if you want the next breakdown the second I put it out, because I promise you, this story is moving fast and I am not slowing down or waiting around for anybody. I'll see you in the next one.